ETF. Let's do it. I'm an associate member of T3 Trading Group, which is an SEC broker, dealer, and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I got out of Peloton today. It's good trade, I guess. Got a little lucky with it, to be honest, I think. We can talk about it in a second. Turn the camera back on. I don't know why I'm in such a bad mood today. I really shouldn't be. I, for the most part, traded really well. P&L is in the green. Not hugely in the green, but P&L's in the green. I did just spill water all over myself, so maybe that's a reason. I'm all wet. But life is too short and life is too good to be in a bad mood, so I got to be in a good mood. Let's jump into this meeting here. SPYs are up 0.4%. Qs are up almost 0.7%. Yeah, David. IWM up 0.1%. So, not including the IWM, which I'll talk about in a second, the market did today exactly what I was looking for from it yesterday. So, day too early, but still, this is exactly what we were looking for. This is exactly what we had discussed as a team here. Market got a little bit extended. VXX, the VIX, started rising along with the market, which is always a warning signal as we were potentially starting to go parabolic here. So there were definitely some warning signs at highs. And we pulled back time and price correction to below the ADMA. We discussed this pattern like 20 times already, so I'm not going to do it again. Inside day off of the negative day to create our pivot point. That breaks higher on Friday. And then I was looking for more follow-through yesterday. Didn't get it, right? We gapped up yesterday. Yesterday turned into kind of a difficult trading session. But I think we were able to do a pretty good job playing defense because, first of all, we did not aggressively chase the gap yesterday. And by, 10:10, 10:15 at the latest, you knew to definitely take your foot off the gas pedal on the longs. And then today we got the follow-through that I was looking for from yesterday. And it was interesting because we did it off of a flat open. I really normally don't like flat opens. I like when the market gaps because gaps, and usually the larger the better, gaps for the market, I find give me a strategic advantage as far as approach goes. Just for example, even yesterday, where broadly I was wrong yesterday and I was looking for upside price action just like we got today, I knew not to start buying the second the market opened yesterday because of the type of gap that we had. So that's a perfect example of the gap giving me an advantage, and my recognition of that actually saved me some money, I'm sure, yesterday by trying to be patient. And then, the setup for the most part to the long side yesterday never really came to fruition. Though, like I said in yesterday's afternoon meeting, if you're buying at 9:55 yesterday morning thinking versus lows, that definitely would have made sense to me. But anyway, we got the follow-through that we were looking for today in the SPYs. We got the follow-through that we were looking for in the Qs. SPYs almost back to all-time highs again, by the way. At the high today, we were just a few pennies away. Qs also, we got the upside follow-through that we were looking for. The disappointing index, I think, is the IWM. I referenced in yesterday's afternoon meeting that I didn't want to overread it, but that yesterday's candle, I think, was a little bit of a warning sign for the Russell. The IWM has been kind of weak here now for 4 out of 5 trading sessions. The only day where it was a little bit strong to the market was Thursday of last week, which was Veterans Day, and was able to pop and close a little bit better than the SPYs and the Qs did. But for the most part, there's been some weakness recently in the IWM, and that's been despite the fact that this TLT has kind of continued to move down. Even today, TLT down another 0.3%, so we know interest rates are up a little bit. Usually when I'm seeing the TLT moving down, that's what I'm expecting to see the IWM outperforming the NASDAQ, and we didn't get that. The NASDAQ was actually able to be really strong today, despite the fact that the TLT closed negative. I actually did think that the Qs were going to be relatively strong to the IWM today, but the reason why was because the TLT was originally set to gap up this morning and was pretty quickly trading higher along with the SPYs and along with the Qs. So that made sense to me to see at least the initial relative strength out of the NASDAQ, but we never really got that flip, right? TLT ended up rolling over. Qs stayed strong. They closed more or less at highs. And while the IWM did catch a bid, IWM was down 0.5% or so, you know, a good portion of the day today. It did end up kind of closing green for us. But I still think that this, you know, it's not an ideal chart pattern, I think, right now for the IWM. It needs to get back above yesterday's high, start looking a little bit better, which is 240.76. Though, I mean, obviously, broadly, this is still bullish. As long as the IWM is staying above 230, I would say the IWM is still in bull territory. But that's the one index that's been a little bit disappointing and hasn't really given the follow-through that I've been looking for. With that said, though, we got the follow-through we were looking for from the SPYs and the Qs, and we just had a lot of great trades today. Some of these were ideas from the morning meeting, and some of these were ideas that kind of came up intraday. You know, probably the trade of the day, and unfortunately it doesn't look like a lot of us caught it. I know I did not, even though it was on my radar, and then I think someone else brought it back up in the meeting, in the morning meeting today, because even though I had it on my radar, I forgot to mention it in the morning meeting, was this ONON through 40 on its earnings report. Probably the trade of the day. I think only a couple of you guys managed to catch it, but through 40 ONON here, you had to take about 70 cents worth of risk versus that opening low, so it's a decent amount of risk. But look at the follow through on this. Oh my God! Immediately to above 46 bucks on the break of that level. You know, by 10:30. I mean, that's just great follow through on the trade to all-time highs in a new issuance here for this ONON. So that was a real phenomenal one. I also had this Home Depot on my radar today in the morning meeting. I thought that the earnings report from Home Depot was great. When I was looking at it and discussed in the morning meeting, it was trading at a much better price than it opened at. You know, when I was doing my research, it was still trading at like 376 and change, and then it was at like 378 maybe when we were doing the morning meeting. So it definitely opened up a little bit high. So I don't know if anybody was able to get stock in this Home Depot. It's also a little bit of an expensive name. I prefer to trade stocks that are a little bit cheaper price-wise. But if anybody was able to catch this Home Depot on that earnings report, it did really give good follow-through. And then outside of that, for once, you know, usually I find that the best call-outs and the best trades come from the morning meeting. And it doesn't mean that you can't make money from the intraday call-outs, but I find that the intraday call-outs can be tougher. I know personally they can be tougher because I haven't had the same amount of time to really think and digest and game plan the trade. So, you know, you want to... I also know, though, for myself that I've got certain game plans that are kind of like set game plans where I could just kind of see a trade and automatically apply like one of my set game plans onto a particular trade. But, you know, there was a bunch today that were called out intraday that were great. First of all, this PROG, I was just a little too busy with Peloton, and I didn't take it, even though I said I like it. I was looking at taking the inside offer at $4.30, and I didn't do it. And the reason why I liked it was because you had the great-looking 5-minute pattern there. $4 we know is a little bit of a level, but you had a great-looking 5-minute pattern here above that $4, and we got hit with bullish option flow at the same time. So you got this 5-minute bull flag, 2 inside bars in a row, the option flow hits. You easily could have bought $4.30. And then I called it, even though I didn't take it, I called it out to the team. You could buy $4.30 here with a stop loss of either of these lows. So you could use $4.15 or $4.12 as the out. You know, you take 15 or so cents risk on it, which isn't small risk for a $4 stock, but the thing was moving today and it got hit with that option flow, and this thing gave great follow through, you know, more or less immediately 70 cents worth of follow through, a deeper pullback, but that deeper pullback never really would have triggered the original stop loss on it. So maybe you would get pushed out of a tighter trailing stop if you raise something like this 455. But if you're using a looser trailing stop or not yet trailing it because you're giving it more room, you wouldn't have gotten pushed out of everything on this pullback, and then it closed almost at highs. So that PROG was a great trade. I think it was Robert in the VTF called out this LCID off of the 955 candle, and it's definitely worth bringing up because I think, Robert, you took it, and if you did, congratulations. Phenomenal trade, great call out. Obviously great call out. It's low of the day. But it's also worth bringing up because this is just it's also a chart that I like. So LCID, we all know, is trading on earnings. I think I mentioned maybe broadly in the morning meeting that I would like, in theory, to be long versus like $46. But 46 bucks, probably is, we might not necessarily get the opportunity based on the fact that it was gapping up to like 50. But we did. This thing pulled back pretty hard. And right when it got to our technical equilibrium on the 5-minute chart, it gave a 5-minute hammer. So this is what I call basically a trend continuation hammer doji. What I don't like about it is that we don't really have the volume confirmation, though it is trading on consistently higher volume. That's obviously because of the earnings report. I would want this candle broadly to be on higher volume. We didn't get that, but I know Robert called this out and was like, hey, look at this candle here. Could we kind of be long versus the low? And I said absolutely. And obviously this turned into kind of the crazy stock of the day. It looks like it's still running here after hours. I was actually at a certain point when it first got up to 54.50, was starting to look at it maybe for a short, but I was just trying to be super selective. I had already thrown some money in the garbage by trying to short that RIVN, which I could talk about the loss I took in that. It was really my only bad. I traded great today, so I don't know why I'm in a bad mood. The only not so great trade I had, and it was a decently sizable loss because I got stopped out twice, was in RIVN. So I was trying to be very selective on a short in this LCID. And I know Pat, while it was on the way up, was like, I would wait till it's at least in the 54.50s to, start looking at it for a short. And I never took it because I didn't really see the upside capitulation in the way that I would want to see. And we know that these trades, these counter trend trades of these super strong stocks, are extremely difficult. So you want to be very selective. For the most part, this is not where you want to go. It's not easy money. It's for sure not easy money. But I think a couple of you guys basically nailed the top initially on this. And then this thing, though, started to look bullish again. Because, the first trade when I was looking at it, it's like, okay, this thing just got extended. It broke out of a nice little bullish 5-minute pattern here, 52.50. And now 15 minutes later, it's at 54.50. And the ADMA is not caught up at all. The ADMA is still at 53. So that's why I was looking at it. I was thinking maybe if I could get one more push through 55, I could try to short it on the way back down through 55. But again, I was being selective, so I never ended up pressing the button on it. Which is fine. It's definitely better to be very selective on shorting this type of thing and miss it entirely than be too loose and just jump in because you think it's up too much and get your face ripped off on it, which easily could have happened on this thing. It still ended up closing on highs, and now again it's trading, I believe, even higher after hours right now. But the best trade instead of fighting this stuff was just to be long on the way up, like it always is. And that was that. Another great trade today that you guys called out was Dkng. I forget which one of you guys it was. It might have been Noah. Nailed the bottom on this thing, which is fantastic. This has been on my radar as well. It's like day 6 down. It's starting to get pretty extended down here. Volume didn't really pick up, but this basically gave the Oldensmith overthrow type trade where, by the end of the day here, where it came back through yesterday's low. So let's see if based off this little doji today in Dkng, we can get some follow through, back to the low 40s, 42.50, something like that, or at least the ADMA on a bigger bounce here for Dkng. So I know a couple of you guys are in this now, and I think at least one of you guys basically nailed the bottom, which is fantastic. And then it got back through yesterday's low, which is great. So Dkng, another intraday call out today. That was money. And then, finally for myself was this Fubo on another intraday trade. Interesting, right? How often do we have this many call-outs that were entirely intraday call-outs that are just such great trades? Like I said before, usually the best trades are coming from pre-market research and coming from the morning meeting with an occasional really good trade that gets called out intraday. And that just wasn't the case at all today. It was almost the opposite. I feel like we didn't have that much in the morning meeting, and there was so much intraday that came together. But basically, I know broadly this $23 is big support in Fubo. It's like day 5 down. It's super extended on the daily chart. ADMA on the daily is up at like $27 still. So this stock is down $4 away from its ADMA, away from that lower band of equilibrium, and it's only a $23 name. That's massively extended in my book and into support. I love extension into support as a trade. I actually had bids out lower start getting heavier in this thing, and I didn't get filled on them. And then I ended up doing what I prefer to do, which is kind of buying on the way up. So the volume pick up. I know it's approaching $23, and the trade I basically just called out was this inside 5. I normally don't like inside 5 trades at this time of the day, but like always, when it comes to those smaller time frame trades, it's about what's taking place around it that actually matters. And what's taking place around the small time frame setup, and I really don't love this small time frame setup. I'll talk about it in a second. What's going on around the small time frame setup is I've got a stock that's downtrending, is extremely extended, extremely beaten up, day 5 down into a huge support area. So that makes me think, okay, I didn't get filled on the bids, volume increased here, interesting snapback. Maybe this is a higher low on a very small time frame. If this inside 5 breaks to the upside and the stock can get back above like 23.50, then I'm potentially starting to confirm a reversal on the small time frame. And if I can get a reversal on the small time frame, then what can I think on the big time frame? Well, on the big time frame, I think I could be thinking very conservatively a move to like 25 quarter these highs from the last couple of days, or really more like $26. So, my first real profit target on this is 25. I did liquidate some in the close, though, just because I was so heavy and I was being super greedy, and I was just like, let me just be smart and take off a little bit of risk in the close, because you never know what can happen overnight, even though I had a decent profit cushion off that buy. I think I got 23.40 on that buy with size, and I wasn't selling anything. I think when you guys even asked, like, Derrick, don't you usually sell? I think like it hit 24, and I was like, I just sold a tenth of my position. And when you guys were like, Derrick, don't you usually sell a little bit more aggressively than that to get your risk covered? And I was like, yeah, but I'm looking for a home run on this, which they say in trading, like, singles and doubles, just go for the singles and doubles. And it's like a very common thing that you'll hear like a lot of trading gurus say. And it's honestly something I both agree with and disagree with at the same time. I think that for the most part, your setups don't call for swing for home runs. But once in a while, they do. Once in a while, you can say, on a trade like this where the risk is so low on that stop loss for at least the heavier stock I took, you can say, you know what, I'm not going to sell anything here. I'm going to go for a home run because I've really got a huge reward potential on this, and I just want to knock this one out of the park. And if you knock one out of the park, and you still got to do that appropriately, right? You still have to have risk management in place. I would have been totally fine just getting stopped out of that stock. But if every once in a while you really knock one out of the park, I mean, that could be your month maker, your quarter maker, even your year maker. So I think, as you guys have probably seen from my trading, I do go for those homers every once in a while, and I think that's okay. And so I did take some off in the close, but I'm looking for am still looking for a bigger sale somewhere in front of 25, and then a little bit more of a reach here. I think that 26 to 26.50, just on a snapback off this extension, is reasonable. So we'll see how that one plays out. So that's basically it. That's all I got. I think, again, great teamwork today, because the communication amongst the team and some call-outs today intraday were a lot of the best trades that we had. LCID, Dkng, PROG, Fubo here. So yeah, that's all I got. Happy to take a look at what you guys got. Scrolling up in the VTF here. Looking for the first question. Charlie caught the ONON. Very nice, man. Very nice. $40 in ONON. I know a few of you guys caught it, but I would have loved it to be more of you. Just a sick trade. Is this thing trading down after hours right now in a big way that I'm missing? Yeah, for some reason this thing's getting smacked back down here after hours from 46 back down to 43. So I don't know if there's something going on here after hours in ONON. DJ saying that I had a nice Home Depot call out this morning. I was able to catch some of it. Quick question. How many positions do you think is too many for a newer trader to hold at once? How much should I be paying attention to my positions versus watching the market? Sure, so great question. First of all, you should always be watching the market. Even, I don't care if you've got 0 positions, 3 positions, 25 positions, you need to always be watching the market. The market is probably our most important layer of probability. You should have a chart of at least the SPYs and the Qs, probably the IWM too, maybe as one of your monitors, having like 3 charts on one monitor, SPYs, Qs, IWM, something like that. Maybe you can scroll into the VIX once in a while, or the TLT once in a while on one of those charts. Watching the market is just so important. Trying to constantly assess relative strength and relative weakness, constantly assess the message of the market at any given point in time is so huge. It's like the biggest layer of probability in any trade that you're taking. If you're looking long and the market's on your side versus the market not being on your side, it's just going to be a huge difference in terms of your overall success. Now, the answer to your other part of your question was, how many trades should I be in at once? It's a very personal question. It really is heavily dependent on kind of where you are in your career and what you feel comfortable with. I can tell you for myself, when I was a new trader, I created a rule for myself that I would not allow myself to be in more than 3 positions at a time. Because personally, I noticed that once I was in more than 3 positions at once is when I started to make a lot of mistakes. I started making mistakes, I started not being able to follow things well enough, and I would make errors. So, therefore, I created a rule, and that rule was don't be in more than 3 positions at a time. Now, over a decade later, it's not an issue for me to be in 25 to 30 positions at once. And I feel very comfortable watching them, managing them, and that's pretty much it. So it's definitely a personal question, but that is what I did when I was newer. So feel what's right for you. You start getting into that 3rd, 4th, or 5th trade and you start feeling like you're uncomfortable with it, then pull back. You kind of know what your limits are, and those limits will expand over time. Robert saying, I did not call the candle, but I took the trade, so credit goes to someone else. So thank you to whoever called that out. Okay, so I'm giving credit to the wrong guy on LCID, but at least you were in it. So great job still to you, Robert. Okay. Seeing Alex S here asking about Aaron's question earlier about inside candles. So, first of all, if you guys have access to my training program, there is an entire class on inside candles, 45-minute hour class, something like that you guys should definitely watch because it answers the question. I can talk about Fubo, I guess. And I actually just filmed a mini lesson that's going to go on the Derrick the Trader YouTube recently. At some point, it'll be on the Derrick the Trader YouTube. That's also touching on inside candles. But basically, inside bars could be a 5-minute, it could be a daily, it could be a 15-minute. It doesn't matter. Inside bars are something that we utilize as an execution strategy, specifically when we like other things. Typically, we want those other things usually, I know I'm saying typically and usually a lot, to be within the confines of trend or momentum. So I love PROG is another great example, right? So this is 2 inside bars in a row. 2 inside bars in a row we call a shooter on a 5-minute chart that is creating a bull flag for momentum continuation in this case, right? So PROG has opening momentum on the first 10 minutes of the day. The stock gets extended, right? The stock here is trading at $4.40 or so with the 80-minute at $3.75. So stock's extended. How do I measure extension? I measure extension by where the stock is trading versus the space between the 8 and 21 EMA. So the space between the 8 and 21 EMA is what I consider to be technical equilibrium for any stock or market that I'm looking at. So if I have a stock that's trading far away from the space between the 8 and 21 EMA, that means that the stock is extended. And then there are obviously degrees of extension. The best way to really measure extension would be to do it in terms of percentages. So whatever, when this thing's trading at 440 and the ADMA is at 375, we could say that this thing is extended by whatever that percentage difference is. And that's how you can start learning, degrees of extension. But the probably difficult nature is that there's no hard, fast rules on this. Because first of all, an extended stock can always become more extended. And secondly, different stocks have different, kind of natures to them, different personalities. A momentum stock, like LCID, has the capacity to become extended much more easily than a grindy type stock, like a Procter & Gamble or even a Microsoft. But still, we measure degrees of extension. So stock that's extended can always become more extended. However, that can't last forever. Eventually, extended stocks need to correct. There are two ways in which a stock or a market can correct. It can correct through time or price. Time, like this example, basically means that the stock moves sideways and the ADMA catches up. It's a time correction. Or price. Price basically means that the stock pulls back down and then maybe creates a pivot low and then continues. That's a price correction. Inside candles within the confines of trend or momentum, exactly like we have here, momentum, and then inside bar, represent rest. It's a period of rest. So usually volume's going to go down, stock's going to tighten up, it's going to go sideways, ADMA is going to catch up. So the way to trade inside bars is really very simple. You buy the break of the previous inside bar's high, and your stop loss is the previous inside bar's low. And there's a little bit of nuance to it, and sometimes we use a little looser stop, like the outside bar low, or if it's one of those downtrend inside bars like I've been talking about so much with the SPYs recently, we will use sometimes the pivot low itself. But simplistically, you buy the break of the inside bar high, and again, it doesn't matter, 5-minute chart, daily chart, 15-minute chart, whatever, and your stop loss is the inside bar low. But I promise you, I wholeheartedly promise you, that if you buy the upside break of every inside candle you find, every inside 5-minute candle that you find, I wholeheartedly promise you that you will lose money in the long run. So again, to repeat myself, this is an execution strategy very specifically for when you like other things. What is there to like about PROG? PROG is above the $4 resistance level. PROG is exhibiting signs of momentum. PROG is trading on unusually high and consistent volume. PROG is creating a bull flag with 2 inside bars in a row. The ADMA is now catching up. There are so many things to like about it. That's why I called it out. So you easily could have bought the break of this candle. And I called out to the team, buy 430. Stop loss, could be either of these lows. And it worked fantastically well. That's how you utilize an inside 5. But it could be an inside day. Here's a different example. An uptrending market. This could be a 5-minute chart, but it happens to be a daily chart. This could be a stock, but it happens to be the S&P 500. But it's trending higher, and it pulls back, and the negative candle followed by the inside candle creates the pivot low that we're looking for the uptrend. I've spoken about that in 7 afternoon meetings recently, so I'm not going to get into too much more detail. We're a little bit different, and I specifically mentioned already when I was reviewing my Fubo trade, what don't I like about this trade? I don't like the time of the day. I really don't like taking inside candle trades, especially an inside 5 at almost noon. I also don't typically like taking them counter trend. I also don't typically like buying stocks that are trending down right into their moving averages. All that stuff is very low probability. You're buying midday inside bars, very low probability of success. You're buying when, volume is down, lower probability of success. You're buying an inside candle in a downtrend, very low probability of success. To make it even worse, you're buying an inside candle to the upside right into the ADMA on that time frame, very low probability of success. So why did I take it and why was I so greedy? Because of the other factors that were on the side of the trade. Market's helping, I guess, but this thing hasn't been trading with the market. But it was extension into support. Extension into support, right? We know that there's daily support at 23. We know it's very extended. And my thought process was, in analyzing this downtrend on the small time frame, that if this inside bar broke up, and I was also watching it very closely, the fact that the volume maximized again at the low of the day, I also liked. So volume maximization here is on my side, and if this inside 5 breaks to the upside and it gets back above 2350, I'm actually confirming a reversal on the small time frame. If I can get a reversal on the small time frame, what can I look for in the big time frame? I can look for a move to $26. So now, even though there's a bunch of things to not like about this, I'm looking at a trade here that is 20 cents risk for the potential of $2.60 worth of reward. Sign me up. So that is the answer to your question, Alex and Aaron. Next is from Rich. How do you know what levels to put your pre-market bids in? I remember last Friday you got filled in Vuzi, and you didn't even know you got good gains. I got filled in Vuzi during market hours though, not pre-market, and that was a breakout. It was just a very simple breakout. Just put a buy stop at the level of the breakout after the market already opened, and I got filled. Trading pre and post market is also something that I do. Today I was trading Peloton very aggressively pre-market. Peloton was by far my best name of the day today. Did really well with it. But I don't recommend people trade pre and post market. Honestly, if you have less than a year of experience, I think it's irresponsible for you to trade pre and post market. And if you even have a little over a year of experience, you got to be very, very careful. Certain order types don't work. Certain ECNs don't work. Stops don't work. So I, for the most part, don't like, people trading pre and post market unless you're good enough to, and you know who you are, I guess. But yeah, and then it's the same thing. If it's trading actively and aggressively on volume, like Peloton was, well, then you can trade the chart. T3's accounts can trade from 4 a.m. to 8 p.m. Again, I highly don't you don't want to look at this after hours yesterday. You don't want to be trading the stock after hours on most days. There's zero volume, guys. Look at this. Typical 5 minutes. Peloton's trading 100 shares or so. A typical 5-minute period after hours. You can't trade this. There's no liquidity. But it was trading pretty actively at 7 a.m. this morning. 86,000 shares on the 7 a.m. bar today. 6:55 a.m. bar, 20,000 shares. And then the volume only increased rapidly from there. I mean, look. Kind of capitulates to the downside. And here you go. There's another pre-market inside 5 and up that I was definitely looking at when I was trading this thing. I was also really heavily watching the tape when I was trading Peloton pre-market. A lot of pre and post-market trading is tape reading. It's one of the, I think, few times in the modern market that having those old school tape reading skills can still be really beneficial. So, I hope that helps, Rich. Seeing a couple of you guys just giving me random symbols like David and Big Z. I assume that means that you want me to look at them, which I'm happy to do. But definitely ask if there's any clarifying questions. What happened in Snap today? Why did it go all the way back down? I don't like this weakness. I guess it closed okay. This thing tried to be strong yesterday and then broke yesterday's low today, but closed okay. It's kind of sloppy price action, and as this 21 EMA catches up, I think it becomes more difficult for this thing to bounce further. I think Snap's kind of in the do not trade list right now. Broadly, I like the company, but I think it's in the do not trade list right now. Pins, I also really don't like pins. I don't like pins even more than Snap from like a qualitative fundamental basis. From a pure technical basis, maybe this thing starts looking better above 50, but broadly I would rather be short this name than long it. But I don't want to do a lot of short selling in such a strong bull market. APP. Why did that not work? APP. Why am I not getting a symbol for APP? That's a symbol, isn't it? APP? Oh, wow. I just for some reason had an insane amount of lag, but it went through. Yeah, you know, we looked at this APP in the morning meeting today, and I said I didn't like it. Look, I don't know what's going on with this thing, though. Look at the volatility for this thing to snap back the way it did. So I guess it's a little bit better today, but I still don't like it. What did the intraday price action do? This thing's kind of nuts. I said in the morning meeting that I really don't like it because of yesterday's candle. Negative Maribozu that fully negated this positive Maribozu. It puts it in the penalty box, and even with that, it gave a beautiful snapback today. But I don't want anything to do with this thing. I guess it looks okay as long as it's holding above 100 or 103. But I think that overall this has been wide-ranging, which isn't bad, but wide-ranging and sloppy, which I don't like. BABA has earnings tomorrow morning, is it? Pretty sure it's this week, one of the mornings. 170's been the spot for BABA. So I've had a price alert out for 170 and never broke 170 again today. I know some of you guys tried to cheat on it a little bit today and got caught by trading this pattern here. And honestly, it looked really good into the 170. So if I wasn't so focused on trading Peloton, I might have cheated as well. You know, the problem with cheating is sometimes you get caught and you lose money on a trade that you never would have been otherwise. But sometimes when you cheat on a trade, you get a better risk reward and you're able to get in ahead of time even before the catalyst comes in. So I definitely understand if guys were, you know, looking at this 2 inside fives, again, 2 inside fives, but note, ADMA had not caught up yet, so it makes it more difficult, but it's after momentum and volume. And wow, this inside five even broke to the upside by 1 penny to potentially sucker some people in. But at this point, why buy 169.85 when you could just wait for 170 when you know it's the real level? Like if I'm gonna cheat on a real resistance level, I want to make sure it's because I'm getting mine 169.25 and I'm gonna have a 75-cent profit cushion going into it, not a 15-cent profit cushion going into it. So it's not surprising to see a 5-minute bullish pattern fail in front of a daily resistance pattern. The fact that is daily resistance does make this lower probability, but it also means that it would be, you know, if it works, then it'll be great too. So yeah, that was kind of BABA today. And Apple, yeah, I don't know. Apple needs to give us more clarity. Maybe we start getting a close above 152 in Apple and we can start paying closer attention to it again. This thing has just been sloppy. You can't not love the company. I mean, it's one that you want to have, I think, in your IRA or whatever that you just hold on to and forget about. Pretty sure I do. But from a trading perspective, this thing's been really sloppy recently. It needs to get back above 152. From Sebastian, if the candle on LCID at 1050 was an inside candle, assuming you're talking about a 5-minute chart, but maybe not. If the candle at 1050 was an inside candle, I think I already know what the rest of the question is going to be. You think the breakout would have been a good entry? I was looking for that, but in the last minute broke the previous high. Yeah, I mean, this is exactly what we look for, right? Is the technical pullback into the equilibrium area followed by some sort of hammer continuation doji or an inside and up. And this could have been that, right? 2 red bars in a row here, pulls you back to the ADMA, followed by a tighter inside candle. If that inside candle breaks to the upside, I like that as a smaller risk trade in an uptrending stock. Thoughts on BBWI? Great looking flag here. I actually like when they do this, if you're bullish, and as long as you're not the one who got chicken out. So they shook out some people off this flag pattern today by bringing this thing below 74. Oh, that's yesterday. But they shook out some people yesterday. And that's actually a good thing if you're bullish, as long as you're not the one who got shaken out. Because when they shake people out like that, but it doesn't actually fail, it makes it easier for it to go the other way. Because now longs are going to have to re-enter. Anybody who shorted, which I don't love that. But anybody who shorted here on the break of this bar, they're getting stopped out. But it's mainly that longs are going to have to re-enter. Or at least, even if they're not entering, they're not selling on the offer anymore for profit. They're out of the way. So it makes it easier for the stock actually to work in your favor. So, yeah, if anything, the fact that this yesterday shook out those other two lows from this flag pattern, it makes me like it even more as long as you're not the one who got shaken out. From my man Big Z giving us some names. Qualcomm was a beaut today. I believe Qualcomm had some news this morning. I didn't really put it on my radar. Unfortunately, this would have been a fantastic trade through 170 resistance, specifically because of the news. I guess this is a mistake. I saw Qualcomm news, and what was it that Qualcomm's making the chips for General Motors? Is that what I saw? Is Bed Bath & Beyond moving after hours right now? Ooh, it is. What's going on here? Bed Bath & Beyond here is giving a little bit of a run. I'm not allowed to say if I'm trading it or not. Oh, let's do it again. Let's do it again, just like the other day. Why not? Sorry, I just may or may not have to get some orders out into this stock here. Is there news in this Bed Bath & Beyond that I'm missing? Okay. Yeah, anyway, like I was saying about Qualcomm, I guess in my own brain, and this is a mistake, I don't view Qualcomm as a big mover. But that's not really true, and especially it was moving well, and this is a beautiful bullish pattern, and then it got hit with what I would expect to be really solid news. We all know that right now the market is crazy for anything electric cars. So I think Qualcomm came out this morning, or GM or somebody said that Qualcomm is going to be making all the chips for GM's electric vehicles, and then the thing exploded through the 170 level today. So this could have been a great trade through that 170, but I read the news, I typed up the daily chart, and I moved on, which I guess was a mistake. It might have been because I was over-focused on Peloton, which I guess was worth it. But yeah, Qualcomm was beautiful today. This AMD is a monster. I really thought that this AMD was going to have to correct a little bit further on this pullback, and it didn't. Touched the 80 MA, and it now is juicy again, heading right back up to highs. If I'm looking at that, I got to look at NVIDIA, right? Yeah, NVIDIA looks great as well. That setup is still potentially there. XPEV, I know guys were chattering. I think it was you, actually, that was bringing XPEV to the table today. I also didn't get involved in it. I think you mentioned either this or LI as a new car that's coming out. Look at the intraday here, very difficult, though, on this XPEV. I don't know what woke this thing up at 10:30. But broadly, this daily chart looks phenomenal as well. And if you could have somehow gotten stock through 49, at least big picture, that was a solid one. Yeah, Micron looks better now, actually. I haven't liked Micron recently. But here above 76, this thing's starting to look better, and this is a more bullish pattern here as well. Let's see if today it becomes an actual pivot low for this Micron. And then Airbnb, I love the company, I love the stock, I love everything about it. The only thing I don't love is that I don't have a position in it. Airbnb is still my best name of the year, and I didn't capture any of this move this summer. Shame on me. Shame on me, because all I do is come here on these meetings talking about how I love this company, and it's still my best name of the year, and that's just from this move. And I haven't caught any of this move. Airbnb looks great. It's just a little bit extended. I love the company. I think, and I was saying this when they IPO'd. Any stock where you're using the name of that company as a verb is like one to own and forget about. Like, when did we start saying that we Google stuff? Does anyone say that they Bing stuff? I'm gonna do a Bing. No, you say I'm gonna Google this. No one says I'm gonna. What's the Airbnb competitor? VRBO. No one says I'm gonna VRBO this. They say I'm gonna Airbnb this, right? I'm gonna Airbnb this house. Love it, absolutely love it. Next here from Ernest. Howdy, Derrick and team. Took a feeler on Oatly. I know Pat likes the milk. Ooh, not good looking daily. Snapback today, that was decent. Risky, yes. Working a small account. Bought near lows, just above 11. bought near lows just above 11. I'm not sure that's the right price, unless you bought it before the earnings report. Option closed in my favor. Only one contract held overnight. Gap down big on Monday. I got you. So you did hold into earnings. Peanut down 50% before I could hit my stop loss. Would you please address how to defend the position, as $9 seems to hold, but was afraid to take bigger, even though I could have evened out the trade or even made a gain, but I froze as opposed to taking the trade in tranches. Sure. So I think this was earnings yesterday. Not 100% sure. I think this was earnings yesterday. The biggest thing I would say is don't take stock in the earnings report. You should not be buying stock right before an earnings report. If you are going to do it, I think, and I'm not an options trader, I think if you are going to do it, doing it with options and being comfortable with the fact that you might lose and it might be a zero is the way to do it. And just kind of, if you are going to gamble, basically, then at least if you're doing it with options, you know exactly how much you're going to lose, as opposed to if you're doing it with the stock, who knows how much money you're going to lose. It's really a pure gamble. So the first thing I would try to say is don't put yourself in the situation to begin with. But now you are in the situation, or maybe it was not earnings, and maybe it was just random news that hit the stock that smoked it yesterday. That is one of the most difficult things I think in trading, is if a stock gaps significantly past your out and where you are planning on getting out for a loss. That's the danger broadly of keeping positions overnight. That's why I have a swing trading rule that I teach the team here about, making sure that you have a profit cushion in order to keep the swing. So I as kind of a general rule, don't want to keep positions overnight unless that position closes at least 1% in my favor. I call it the 1% rule. But honestly, sometimes 1% is not enough. But the idea here is, if at the close, I'm keeping 25% of a position, so I already sold 75%, so I'm already making money in it, and I'm on that 25% of my position that I still have left, or whatever. Sometimes it's more, sometimes it's less. If I'm at least 1% in the money on it, that's going to help me to cushion bad news or bad market news, or if the whole market gaps down 0.5% tomorrow and my stock gaps down a percentage point tomorrow, well, guess what? All I did was give back open P&L. So the first thing, again, I would say is that we want to try to have rules in place that prevents this type of situation from actually occurring. Should it occur, and stock gaps way past your out, it's a really difficult thing. It's a really difficult thing. I do think it's a little bit case dependent. Maybe it shouldn't be. Maybe there should be clear rules on this for consistency. But I know for myself, it's probably a little bit case dependent. That might not be the right thing. I'm kind of just thinking out loud with you and working with you right now. For me, a little bit, it depends on how much I believe in the stock. And that's probably not the right thought process. I do have what I call a 15-minute rule on swings that I know Diego loves to use, and it saved his butt a few times and saved my butt many times. My 15-minute rule is if a stock gaps past my stop loss, I wait 15 minutes. I basically have no out for the first 15 minutes, which is definitely dangerous, but hopefully there's only so much a stock can go down in 15 minutes. And then my new out becomes whatever the absolute low is after 15 minutes. And the reason why I have this rule, why it exists the way that it does, is because if there's going to be panic selling in a stock because of a big gap down, which is typical, that panic selling typically lasts about 15 minutes. Sometimes a little bit more, sometimes a little bit less. But if it's been 15 minutes and I now have a clear low, and a lot of times it's pivoted by that point, I know, all right, that's it. The panic selling is over, and if it breaks a new low, it means that it's real institutional selling coming in, and I got to get out of the way. And then what I'll oftentimes do is I will double or triple down my position in front of that low to try to work my way out of it, and then potentially get stopped out of everything for a significantly worse loss that I was hoping to ever take in the trade. And that sucks, but it's part of the additional risk of keeping positions overnight. So I hope that helps you create some rules for yourself, Ernest. Cody asking about QS. I do prefer, guys, if you just throw a symbol in if there's a question that goes with it. Or you can just say, hey, can you just take a look at these names for me, and that's fine too. Yeah, QS got downgraded today, so I didn't want to go in and buy it, but it actually pivoted really well in its equilibrium area. The tail here is about half the body, so it's okay. But yeah, you know, this low from today and this absolute recent pivot low of 33.63 are going to be our important spots for going forward. Rich saying, have rules, but no one to make an exception. How do you capitalize on a name like IONQ today? IONQ. Whew. A lot of times I don't. A lot of times I don't. If I don't have a real reason to have the stock on my radar, I'm not going to be capitalizing on it. Now, there could be reasons why it could have came on my radar. One of the bigger ones is if we're seeing, you know, consistent bullish option flow hitting for the stock that Pat's posting, because we know what that can do for the name. It can give a gamma squeeze and all that great stuff. This looks like it was also a recent SPAC. I have no idea what this is or why it moved the way it did. I think Stefan had a position in it that he mentioned he sold. I think he said that. I'm not 100% sure. Maybe I'm wrong on the name. Maybe I'm wrong on the guy. Who knows? But yeah, for the most part, I'm not going to catch it unless I have a specific reason to have it on my radar. You know, I like to say stocks are not Pokemon, right? You can't catch them all, and it's okay to miss moves. You can't possibly capture everything. But if you have a reason for it to be on the radar, either because of your pre-market research or because something's happening intraday or seeing that flow hit, something like that, then it can become on your radar and you can potentially capture it. And then you still need to have your actual setup to get you involved. Like that PROG today was not on my radar at all. What got it on my radar? I saw Pat post bullish option flow and I saw you guys talking about it. So I typed it up. I was like, oh, I love this here at 4:30. So that's how you potentially could have gotten an INOQ, something similar to that. We're seeing why ONON here is down after hours. Estimates about 11.8 million shares will become eligible for sale in the public market at the open of trading on November 19th. Not good. Stefan saying SNII. Looking good into the close. I think there's another SPAC, right? Every SPAC is great, as long as it's not BOEX. Okay, DJ. That's the way to do it then. Jerry saying, in Peloton trade, isn't a secondary a high probability of failing long? Going counter trend, do you scale into size usually? Yeah, so, you know, this Peloton's a bit of an anomaly today. Secondaries usually fail. Secondaries usually fail. Secondaries usually fail. Secondaries usually fail. I don't advocate buying a stock that announces a secondary offering. They're saying a price of $46. It kind of blows my mind that this thing had its strongest day that it's had in a while and went to 55 when they announced a secondary priced at 46. Secondaries usually fail. The float increases the stock, so that means that supply is increasing, but if demand stays the same, the stock goes down. I was already swinging the stock. Luckily, I wasn't too heavy, but I still had a position in it. And obviously, you know, I'm logged into my computer at home seeing the news hit about it. And it started because I kind of needed to trade my way out of the position because I was already involved. If I wasn't already in Peloton, I would not have traded Peloton today. Let me just get that across. Peloton, I made a lot of money in it today. It's by far my best name. I got kind of lucky. I traded it well to give myself some credit, but I also got a little bit lucky that the stock did what it did. This thing easily could have gone to $43 today. I mean, it did, pre-market. Went to 43 and change. I actually keystroked and sold 100 shares at 43.74 for a loss. But it was an accident, right? I didn't mean to press that button. But that was almost a pre-market low that I sold on that 100 shares. And then I was buying it on the way up, and it worked out really well. So, I mean, that would be what was the question? Yeah, for sure. High probability of failing, and like I said, I don't think I would have traded it if I wasn't already in it. And I definitely got a little bit lucky, but I also kind of picked my spots in it and traded it well, and it went up. So I really don't like this trade. I'm never going to ever say ever. As a matter of fact, there's a short that I like. I like shorting stocks when they announce secondary. Look at SoFi. I had 2 stocks announce a secondary offering today. Luckily, SoFi was also very light in. This is what stocks are supposed to do when they announce secondary, is get smoked. SoFi today is down 5%. It gapped down and then was super weak almost all day, caught a little bit of a bounce, then rolled over again and then closed. That's what's supposed to happen on secondaries. And I don't even think we know what the pricing is yet on SoFi secondary. Dkng, speaking of secondaries, I remember when Dkng announced the secondary at $50. Or $55, was it? Somewhere on the way down here in October 2020. And look what that did to the stock. It destroyed it before it could finally catch a bid. I think that Peloton, the language on the secondary was a little bit vague initially. That helped. And I also think it's just so beaten up going into it. And I still have no idea. I made a TikTok about this on my bike ride to work today. I have no idea what management is doing. What on earth is management in Peloton doing? They basically said, I think on the last earnings call or just after, like, oh yeah, we've been doing a bad job. We got a bit too excited with how well things have been going. We got to tighten our belt a little bit. If you need to raise cash, why are you not announcing a secondary offering when the stock was over $100? How are you going to wait until the stock goes down 75% to announce a secondary at 46? It blows my mind. The whole situation blows my mind. So I didn't even really spend much time talking about it in the afternoon meeting, just because even though I did really well with this name today, I liquidated my position when I got to 54, which was my target, and I got a little bit lucky. I don't think that buying secondaries is how you're going to make money consistently. Yeah, David, Dkng didn't really have much capitulation at lows there. Cool, Mike. Good to hear it. We're starting to run a little bit late, so I'm going to try to blast through any remaining questions. Sebastian here talking about inside candles. I was in PROG at 416. Talking about this? That's what I'm talking about. And at 1010, I had like 20% of my position left. Okay. When I sold 2 inside candles and it broke 472, I added back 20%. So adding back I like more than adding. If you told me that you took an actual add here, I wouldn't have liked it that as much. I mean, maybe. But the later in the day it gets, the less I like those inside candles. The later in the day it gets is when you usually start seeing like bigger time frame corrections. Like you'll see more of like a 15-minute correction. So that makes these, like, it's very rare to see like a perfect stair-stepping 5-minute pattern all day. So for this PROG here, an add back makes more sense to me. So I think that's fine. From Brent, I see a SoFi chart. I'm sure I had SoFi up at one point. I'm not sure if you have a question with that. If the video froze, you just got to refresh the page. Can we look at Roblox? I feel like I was one of 3 people trading it today. Where do we see this going technically? Inside, day candle tomorrow, light day or higher continuation, doji candle. I mean, I love Roblox from a qualitative fundamental perspective, but I don't really like looking at these stocks when they're this extended. Great breakout through 110. I mean, the real trade here, I even thought it was up too much at that point to take it, was the buy 2 days ago at $100 and, the break of this inside candle, $100.41. That was the real spot to be buying this. I think buying the 110 breakout when the ADMA was still at 101. Stocks extended by 7% or whatever from the ADMA, and 21's all the way down here. I think that's a very difficult trade, but we love the story. We love the story on this, so it can get follow through. So I don't know. You want to see a time or price correction at this point, a high or low, whether that's through time or through price. Your guess is as good as mine. But if we want trend continuation, that's what we want to see. With that said, the story behind this, the way the market's been moving recently, maybe it just goes to 140 tomorrow and just doubles today. I wouldn't be overly surprised about it either. Scrolling through here to see if there's anything else. Oh, Oldie got downgraded today. Okay. Steve says he thinks that oat milk tastes like illiquid oatmeal. But I know Pat loves his oat milk in his coffee. Loves it. So I don't know. I only tried it once. I'm neutral. I'm neutral on the oat milk situation. I do drink almond milk though. Yeah, that's the right idea, Gabriel. Yeah, Big Z, for sure. It's definitely saved my butt a few times, that 15-minute rule, and I know it's saved Diego a few times since he started implementing it. You know, that panic selling is the first 15 minutes, so gaps past my out, I wait 15 minutes. All right, gang. It's after 5 o'clock. I'm going to call it. Give me a like on today's video on YouTube if you haven't already. You know, we're really trying to build that up over here. I've been putting a decent amount of work into it, so appreciate you guys doing the like and subscribe thing on the Derrick the Trader YouTube and liking those videos and watching them. And I'm trying to obviously provide, you know, good content to make all the traders and the team better. And putting up a lot of those mini lessons on there that I hope you guys are getting a benefit from. And I guess that's it. See everybody tomorrow. Have a great night. Oh, Zahora sneaking in one more question. Okay. Tesla looked great today. It caught a bid back. I still think that these daily technicals are very sloppy, and I'm not sure that Elon's done selling is the scary part. You know, you saw the tweet to Bernie Sanders. Maybe he's got more to sell. I think he only sold $5 billion worth. Wasn't he originally talking about selling $10 billion worth? So he might end up selling more still. So I don't know. I think that the daily technicals here are a little bit sloppy. You kind of have this descending triangle off of $100. That $100 support zone is still really important on the downside. The stock had a good day today, but I really don't have conviction in Tesla right now in either direction. So Steve's saying he still has to sell more. So, and I kind of think he still has to sell more also. And if that's true, I wouldn't want to be on the other side of it when he's selling. So I would still be patient on that. All right, everybody. Have a great night. Solid day today. You guys rock. Keep up the great work. Great teamwork today. Team here is doing fantastic overall. I love to see it. Have a good night, everybody.